Welcome, everyone. This is Jeffrey Camus with StockSmart, where we look at interesting things going on in the market, stocks, and what's going on in general. Wanted to take note of something that's happening right now is these high interest, short interest stocks like GameStop. GameStop is fantastically interesting right now. GME, ticker symbol, which as of today, which is January 26th, is 138% short, which is incredible, and it's part of what they're calling like a Reddit rebellion, which essentially is a group of retail investors, maybe Robinhood or those investing with E-Trade or smaller companies like that, are essentially retail investor. Again, is what they call like an average investor or someone who is investing for themselves, as opposed to like an institutional investor. What they're doing is essentially they ganged up on these stocks and said, "Hey, we're going to try to break these shorts." And they did it as a group. And they're essentially punishing those who were short in GameStop, which is now up to $220, which was stock that was at $12 months ago. So whoever was short in this, and that's generally these large hedge funds that are taking these big, large short positions, have gotten just punished and literally put out of business by it. There's a lot of this seems to be a really common current trend right now. There's a lot of other shorts that are very interesting, getting a lot of movement as well. Space, which is the SPCE, which is Virgin Galactic, that's about 80% short, which is now I think it's hit an all-time high. It's at 42 right now. And that's been bouncing around a lot. It's 82% short. It had a high of February 2020 of 37, then has bounced around and sat in the mid-20s for a long period of time. Now today hit a high of 43 after hours. So that bounced up about 19% today. And that's incredibly short at 80% short, again, getting pounded by a short squeeze. AMC Entertainment, the movie theater company, a couple months back, they announced that they didn't know if they had funding. And so AMC went down to around $2 a share. There was a large short position taken in it. It's about 70% short currently. But that stock has rebounded almost 300%, now over $6. Again, another short squeeze taking place. Other ones of interest too are, the retail coupon company Bed Bath & Beyond, who generally would send you a large coupon that you could bring into the store every month and get your discounted items. But we know most people aren't going in the stores these days. Bed Bath & Beyond is 70% short, also kind of on a recent tear when that stock has really, really gone up a lot in a massive short squeeze. Bed Bath & Beyond today has jumped up greatly in value. It's up 37% today, up to $43. That stock had been in the $5 range just in April and as April of last year. So this thing has really taken off within the last 2 weeks. It's up something like, 18. It's doubled. It's up about 135% in the last 2 weeks. So that stock is also part of a short squeeze. So it's really interesting. These hedge funds are definitely getting pounded by these. Other shorts are. It's actually a stock we really like, that I really like, which is Fubo TV. I'm a user. Fubo, which started as Fubo. The name comes from like football. It started off as a soccer broadcaster, but I'll tell you, as far as any of these, these Wi-Fi kind of TV concepts or app TVs like Apple TV and Hulu, which I've had before as well, Fubo by far has the best absolute sports package. And that also has a large short of 62% short. Fubo has done really well, and recently it hit, at one point Fubo was up to 60 plus just in late December, dropped down all the way to 24, and the shorts stayed in it, and now it's up to 46 again. So today it made a bump of about 13%. So Fubo's still on a little bit of a tear as those shorts try to evade the position. And just to be certain, so everyone can understand what a short is, essentially you're betting against the stock, so you're betting it to go down. So now if you're at 46, if you take a short position in Fubo, you actually have to borrow those shares from someone who owns them, and then you pay them interest to borrow the shares. Now, if the shares go up, that's a negative position that could be negative to infinity. So you could be looking at a large loss, and you're also paying interest holding them. So if the shares go up and they go the wrong way on you, then what happens is people start evading the short, meaning they have to buy to close out the short position. So that's what happens in a short that creates this fury of pumped up pricing. So as the shorts evade the position, they have to buy and buy and buy, and that pumps the price up and up as demand grows greater. So that's why you see these massive short squeezes. So technically, as an analyst, when you look at a short position, it's actually a bullish indicator, because what's happening right now is you see all these shorts and they are pumping the price up. So when you look at it as, it's a negative indicator when you have a heavy short position. And by heavy, generally, these are incredibly shorts at over 10 and 15%. That's normally a large short position. These are in the 50, 60, 100% range for GameStop. And there are literally hedge funds going out of business because of this, or they're suffering grave consequences right now. So anyway, that was StockSmart for today, January 26th. This again is Jeffrey Camus, and I wanted to just bring you that information. And I would tell you, as far as for retail investors, I've had several calls in the last 2-3 days about these stocks. And people ask me, should I get involved? And I would say generally no, because what's going to happen on these stocks like GameStop, now over $200, they're going to eventually evade the position. They're going to, and the bottom's going to fall out really quickly. So you can have that stock go back down to $30 rather fast. And you don't want to be sitting there holding that stock that's never going to see those prices again. You could have a massive loss. So I would say for the average investor, do not get involved. Stay on the sidelines. Let someone else take the hit, because those stocks, as fast as they went up, is as fast as they're coming down. We'll talk to you soon. Thank you very much.